just want to say welcome back. It's been a while. I've been off a little bit for the last 4 or 5 weeks because I had a herniated disc in my neck, actually, but I'm back. I'm George Markowski and welcome to the Positive Property Show. Our mission is to empower 10,000 people to create financial freedom through property using the Markowski method. Join us. Hello, how you doing? George Markowski, I'm back. And hello. And welcome everyone, freedom fighters. Everyone listen to us live. If you come down to on Facebook, the Australian Property Chat, that's where you're going to find us, and that's where you can interact with us. And I've got some really great guests on tonight. And what we're going to be talking about tonight is, how to get a property in a booming market. There's no surprise at the moment that the market is booming. And I've got a builder on, Justin, who's going to be coming on in a minute from Queensland, and he's had a lot of experience, and he's going to be talking to us about what's been happening in the building industry. We've also got one of our regulars, Adam Albright, is going to be coming on later as well. So I'm going to put Justin on and say hello. Hey, Justin, how are you?
Hey, George, how are you, mate?
Very good, mate, very good. How's sunny Queensland?
I didn't realise that I was actually getting put on, and I'm actually feeding my daughter.
Okay, there you go. Yes, we've got some technical difficulties. So with Adam, if you're watching, you need to change your camera because you haven't selected your camera and we can't see you.
We don't want to see Adam, George. Let's face it.
Oh, look, he's been growing his beard for a while. It's looking good. We're waiting for him, but I can see his signal's a little bit weak, but we're working on it. But anyway, so Justin, how long have you been in the building game for?
13 years now.
Yep, 13 years.
Yeah,
Up in
started out as a salesperson in Queensland in the investment space, and moved on through that investment space to more high end. Oh, not high end, but medium high end type dwellings.
Excellent. And look, at the moment, it's gone crazy with the market at the moment, and a lot of people aren't aware of what's been happening. But there's been a lot of FOMO. People have got this fear of missing out and going crazy trying to buy property at the moment. And developers are going crazy putting their prices up, and building costs have gone up. What can you tell us about this?
Well, the big thing, George, I think, is the auction clearance rate. Auction clearance rate in Brisbane have notoriously been terrible.
Yeah.
40%, year on year for forever. As of last weekend, we're getting auction clearance rate in Brisbane and around middle Brisbane of around 80%. So that purely actually just tells us straight out that people are just fighting over each other to get whatever they can, whenever they can get it.
Yep.
So that is obviously driving up the pure land value. People are looking for knockdowns. They're looking for something just to actually put some, roots into. But the reality is, fear of missing out is a big thing.
Yep, absolutely. And the other thing, I suppose, is, since COVID, like the rising cost of building supplies is huge. What I want to do is I just want to share this file with people, just so people can see what's going on. Let's have a look. Let's share this file. Share screen. Okay. You can see the screen now. So you look at this rising cost of building supplies. So building items, laminated beams, for example, 75% increase. Then you got prefabricated framing, another 75% increase. Trusses, 75%. Steel reinforcing, 35%. Roofing, 30%. It's just going on and on and on. Timber's gone up 30%. And you add all this up, and it's really become quite expensive to build a property. So what's happening at the moment, I suppose, is people that have started to build a property, and with developers and builders at the moment, and now the building price have gone up. There's a lot of builders going down, unfortunately, because of they can't afford to actually finish the house. heard a lot of that happening. I know a lot of that's happening in Melbourne at the moment.
George, from my perspective, what I've heard through various circles is that quite a lot of builders are trying to get out of contracts.
Yep.
Relevant to the fact they ended a lot of contracts towards the end of last calendar year when the Australian government stimuluses kicked in.
Yep.
And we're talking about big builders, not just like me or like a small little builder. We're talking about big builders who've gone, well, we can't actually complete these houses for the contracts we've signed them. And they're actually giving financial incentives to the clients to get out of those contracts and moving on. The big thing I see moving forward, and I've had a conversation relative to one of my own contracts with the QBCC recently. Like the client's absolutely pissed off, and I don't necessarily blame him, but he's just been completely held up and by frame and truss delivery. He wants to try and terminate the contract, and I'm like, well, where does that leave me as the builder in this process? Well, the QBCC have actually said, well, what have you done on site? And I said this, and he said, what have you been paid for? I said that, and he said, well, how can they actually go after me as a builder from the QBCC perspective? So that's one thing, but I don't want that client to do that because he's going to be worse off. I prefer to honour my contract, move forward, and not have that legacy of me. But I don't know how the big builders who are doing volumes and volumes of houses can keep doing that.
Yes,
and I don't think they know then how bad it currently is.
Yes, and that's the big challenge at the moment because we've got a lack of supply. Building supplies have gone up, and it's quite a dangerous time in the marketplace now because if you buy the wrong product that's not going to be ready for another few years, you could actually be in a lot of trouble because you may not end up getting a property. Because I know there's a major builder who rescinded, 500 contracts Australia-wide? Was that what it was? I don't want to mention their name, but
it was actually 1,500 in Queensland.
1,500 in Queensland. They rescinded 1,500 in Queensland, right? That's what they've been doing. And the thing is, this is the challenge because something that hasn't finished being built yet, the costs have gone up. They've already got a contract for a certain amount. And for people that aren't familiar with contract law, what I want to do is just explain how contracts work because this is one of the most important things that people don't realize. Because a contract is not a contract until it's unconditional and some sort of money has been exchanged. So in contract law in Australia, because our law system goes back to England, back in the old days of common law, and that's the way it works. So when two parties enter a contract, what happens is you got this little thing that you've written down, but then what has to happen is there needs to be an exchange. Like someone has to pay some money, and then you got conditional contracts. So if you buy a property and say, okay, I want to buy this property subject to finance, that means that until that subject to finance clause is fulfilled, you don't actually have a contract. And if you don't get finance by that certain date, then the developer can take the contract off you. 2, also, if you get finance and go unconditional, then they can't take the contract off you. So what's happening is a lot of people out there think they've got a contract, but they haven't because it's not unconditional, and they're losing their property. All right? And this is the one thing that's happening there. So that's one place where the builders can't really do anything because they're stuck. They're caught in that contract. Is that correct, Justin?
Correct. Spot on. The biggest issue we've got right now is we're locked into a contract under the terms of either HIA, a Master Builders, and or a QBCC contract. There's also the Australian standards, but most residential builders won't use an Australian standards contract.
Yep.
But there's no, unless you've provisioned for it, i.e. as a provisional sum or a prime cost item, as a builder, you can't actually, you have to honour that contract. There's no grey area around it.
Yep.
You can obviously talk to your clients and say, can you help me out here? But the reality is that they've got no obligation whatsoever under the terms of that contract to actually say, okay, well, the frames have gone up 100% since we signed that contract, that we're going to help you out.
Yep,
So
yep,
a lot of builders right now, especially, I'm speculating to a degree here, but there's a lot of builders out there who'll build 50 to 75 homes a year who have been killing it because they signed so many contracts once that $25,000 home building boost came through.
yep.
So they probably are just rolling through. And because they've got the momentum through the market, they probably don't know how much those price increases have actually affected them throughout the last 12 months.
Yep.
They've got a flow-on effect.
That's right. So the thing is, the one thing I guess we've got to be careful of is the writing's on the wall. A lot of builders are going to go broke.
I spoke to my accountant 2 weeks ago, just doing my end of financial year stuff, and he told me the week before, 8 builders went broke the week before.
Yep. Wow. There you go. Just the week before.
Just the week before.
Yep.
Not talking about anything in longevity, just that particular week.
Yep. And this is the problem. This is the challenge, because what people have to realize is one of the things we discuss and talk about at Positive Property is about getting the top 100 suburbs. There's 16,000 suburbs around Australia. And what we do is we want to get the top 100 suburbs. And that's one of the key equations, because where you buy is so important to make money. And we've got that down pat. Now, the other challenge is a lot of people don't realize is actually the second part of the equation, and that's choosing the right builder that's actually going to actually be able to deliver the product. And a lot of people don't realize that. You can't just go on realestate.com and choose a builder out of anywhere, because you don't know if they're going to be here in 12 months or 24 months or anything. You don't know if they have provision for the property price going up and everything else like that. So there's a lot of variables at the moment, and really, you've got to do your due diligence, be really careful who you deal with, because it's going to be hard. And look, and the thing is, this is the fact. No one saw this black swan coming. Nicholas Taleb, he says, the black swan event. There's the one black swan event because the last time we had a pandemic was 1918, which is 100 years ago. So who in the world would have thought we would have had this big COVID pandemic and this would have happened? So not a lot of people provisioned for this happening. No one expected it to happen. And what happened was, when COVID hit, everyone was saying property price is going to go down and blah, 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 blah. And they got it all wrong. Now, I was saying from the beginning, it's going to be a V-shaped recovery. There's going to be a little bit of a dip, but then there's going to be a massive upswing, as there always is. Every time there's a drop in the Australian real estate market, there's a massive compensation going up. So, we saw that, but I didn't even myself foresee that prices of building materials were going to go up because of what happened recently. So I was surprised as well. And I think a lot of people were surprised. I know there's some builders that are buying, steel, tons of steels from New Zealand and places like that, and things like that, just to keep going. Is that correct, Justin?
Well, I haven't heard about the steel. I haven't had an issue with steel shortages. I can get steel relatively easily. It's more about actually the price of the steel. I've got a job right now in Holland Park in Brisbane, and the quote for steel as of plans in February this year was $4,800 for the structural steel in the job. Mm-hmm. Now I'm only actually putting the frame up now because of delays in supply of frame and trusses. Mm-hmm. The cost of the steel's nearly $7,000. So it's not actually the supply of; it's more about the price of in the structural steel perspective.
Yes,
you get that in the slabs as well. Obviously, for the your SL82 or whatever Rio's actually called for in the engineering, all that adds up.
Yep. I think this builder, what they did is, because they couldn't get timber frames 12 months. There was a 12-month delay. They decided to import 100 tons of steel from New Zealand so they could keep building. Oh. Right? So...
Is that in Queensland?
Yep, in Queensland, a builder in Queensland that I know, they've imported 100 tons of steel so they don't get caught up this whole... Because I think it's a 12-month wait on wooden frames at the moment, if not longer.
If I order a new job today, on March.
Yep.
I'll get a frame in March. But in saying that, floor systems for 2-story dwellings,
Yep.
I was expecting some jobs to be delivered in November, and Dindus, as a supplier, put them back to end of January.
Yep.
So it is a supplier by supplier, case by case scenario. It's messy. It's very messy.
Yep. And what we've got a question here. They're saying, what are the government doing to get product in so builders don't go broke, especially as they promoted it through grants?
Well, the big thing is, like, I use a particular company for my frames and trusses in Queensland.
Mm-hmm.
We have a shortage of Australian pine at the moment because of the bushfires at the beginning of 2020.
Yep.
My frame and truss manufacturer has now invested in a machine that can better press current Australian pine, so less aged pine.
Mm-hmm.
So even as an individual business based in Brisbane, they are doing stuff to try and circumvent the shortages of supply.
Yep.
So, like, everyone's trying to be as inventive, as creative as they can. Everyone wants to keep doing business. No one wants to shut their doors. So, you know, my frame and truss company I use, like, if they don't have material, they can't provide their clients, and they can't keep employing people. So they're being inventive in what they're doing, and they're investing in that process. So I don't know, but I hope other builders and suppliers are doing the same sort of thing. So you just got to. The biggest thing from my perspective is just actually sending out to my clients the industry information. That's the information that comes from Master Builders, that comes from the QBCC.
Mm-hmm.
So if they don't trust that, well, they don't trust anything anyway. So it's almost like a moot point.
Yep.
If we can continue to try and keep communication as open as possible, and clients trusting the process, like, we'll be okay. But, like, I'm talking about how I'm trying to operate our business, not necessarily how other builders are operating theirs.
Yes, that's right. And so the thing is, I mean, timing now takes a lot longer, because I know we've got quite a few clients been waiting for properties to get finished, and it's taken a long time. What's the average time from a start to finish standard house build single story now?
Oh, well, I can't give you a definitive answer on a low set single story, because I'm now building houses like 350 square meter 2-story houses is my normal house.
Yep.
But I was doing those in about 6 to 7 months, 12 months ago.
Yep.
And then they're 9 to 11.
Yep.
So
Yep.
that, like, there's just definitive hold-ups. But what you can't do at the moment is give definitive time frames. That's almost impossible.
Yep. Adam, hello, welcome.
Boys,
Hello, Adam.
how are we? I've had to use my wife's laptop because my laptop has decided not to work.
That's all right, mate. Welcome.
Hey, Justin, sorry to put you on the spot there and throw you straight in the deep end, bud.
Yeah, thanks, Adam.
Nothing like a trial by fire. Well, this is the George Markowski comeback show, actually, because I've been away for 6 weeks because I've had a bulging disc. So I'm glad to have you both on board to help me go through this and talk about what's happening around Australia at the moment. This is something that's very important that people need to know, because a lot of people don't realise what's going on. And I'm glad you guys are both there, because you've both got some great experience. You know what's happening. Because I just wanted to talk about, there's a major builder in Queensland, and they put their prices up $40,000 or $200,000 build in the last 12 months, right? And prices are forecast to go up 7% over the next 12-month period. So if your land is ready to start construction in 12 months, the builder's going to add allowances for delaying construction. And the main issue South-Western Queensland's facing is actually lack of land availability. I mean, there's no land, is there?
There's no land.
I mean, what is it, 12 months now to registration date where it's available?
And that's if you can even get land, which is 12 months away. A lot of it, they're saying that it's coming, but because we've had such a big boom, the prices have just gone through the roof. People are buying them, but councils just can't keep up with all the permits.
Yep. Yeah, it's crazy. And I mean, look, everything from the pre-site council approves to raw material delivery, bricks, cabinetry, roofing. Labour is even running behind forecast dates because there's not enough labour. There's not enough people to build houses, is there?
Yeah, well, Justin and I were talking about this earlier today. Justin can get like a labourer on site that used to be like about $25 an hour, and now he's paying $43 an hour for a labourer. Or what's a chippy worth, Justin? About $50 an hour.
On a part-time basis, yeah, like on a casual basis, you know, chippy for $50.
Yeah,
But
and now, yep. Sorry, go.
if you want to actually, well, this is where it comes back to a whole business decision perspective, and there's no right or wrong answer here, but like a first year chippy, so straight out of his apprenticeship first year, you can get for about $27 an hour. But you still need to employ somebody who can supervise that and have a trade contractor's license to cover off what they're doing. You know,
Yep.
so the big issue we had in Southeast Queensland in the last 12 months is a lot to do with the massive storms we had last September, October, that really smashed, the whole Browns Plains, Springfield Lakes area.
Yes.
So roofers, we didn't have a huge increase in price of roofing materials at the beginning of this year, but the actual roofers were getting paid a fortune by insurance companies to go repatriate damaged roofs. So, like, to get labour to put a roof on a new residential house went through the roof, literally. So I used an example with George before. I had a job quoted for a roof late last year. It was $9,000 for a roof. It was a part renovation, part new build. That the price for that today is $21,000.
So that's well over 100% increase in prices.
Yeah, correct.
That's right. And look, the other thing is, I mean, we still haven't had the effects of the Olympic Games because there's going to be a massive boom of commercial construction, civil construction in southeastern Queensland for the Olympic Games, which is going to be going in 2032. Now, normally Olympic Games, they cost around about $5 billion. You know what I mean? That's a lot of money coming in. So you could imagine one thing, all these people working in the building industry are making more money, which is great because they got more money to spend, which builds the economy. But then they're gonna be even more money then once their infrastructure. So building price is going to go up even more because you're going to have too much competition.
Well,
now, go.
It's the greed factor. Well, I don't like saying it, but it is the greed factor relevant to the whole process. So we have a situation right now where tradies and suppliers are actually making a killing, and they love it. Like it's like Twiggy Forrest in iron ore. All of a sudden his price goes from $100 a ton to $205 a ton in supplying iron ore. He hasn't done anything different. He's done everything exactly the same he's always done for the last 30 years, but all of a sudden he's making double the amount of money. So you've got a really big circumstance where trades can put their prices up, and probably fundamentally they deserve it. Like I'm not going to argue against trades making money. The problem is as a builder and in your guy's situation and how does that pass on to the valuations and to the banks? That's another big hitter we face currently.
I think
who's dealing with that aspect of it and who's making that decision? Because and I use this example with Adam earlier today. I built a big house with an attached granny flat for a family member in Holland Park in September. Started in September 2018. And it was probably a $550,000 contract, which equated to about $1,350 a square metre, which was even 3 years ago was probably on the high side of stuff. That same house today would probably cost circa $2,000 a square metre to build.
So that's a huge increase.
And so, exactly. Now, so people are saying, how does this impact capital growth? Good question. And I'd like to start that. But, one thing, I mean, the deal is capital growth is a pure function of supply and demand. There's nothing else there to it. When there's more supply and demand, capital growth doesn't go up. And when there's more demand, less supply, capital growth happens. That's what capital growth means. because it's a bit like, if everyone wants a certain thing and there's not enough of it, there's less supply, it's going to go up in value. Now, there's a very lack of properties, and because building costs have gone up, land's taking so long to register, that's just going to put more pressure on property prices to go up. Now, I want people to remember this and write this down because this is important. And, because what happened was, if you look back in the mining boom, back in the 2000s, and if you look at the average price of a property in Sydney compared to Perth, it was $1,000 per square meter difference. Right? Now, Sydney is like triple the price. Brisbane, right? At the moment, if you look at Brisbane, it is the cheapest buying there is. It is so cheap because Brisbane, I believe, is going to be back into the big boys, because you got two capitals here. You got Sydney and Melbourne, the two big players, and then you got Brisbane, Adelaide, and Perth, sort of lagging behind. What's happened is, Perth came up and joined Melbourne and Sydney as the three most expensive at all similar prices. Perth was actually more expensive than Melbourne at one stage.
It was.
Right? So that's how powerful Perth started punching with the commodity boom. But Perth dropped back down again. Now, you watch this replay in 5 to 10 years' time, and you look at Brisbane, and if you haven't bought property in Brisbane, you're going to kick yourself. You're going to be going, what the hell did I do? Because what's going to happen is Brisbane is going to be, if not more, but the same price as Melbourne, at least, if not more.
Well,
Right?
George, let's throw a few numbers around. For example, townhouses that you were putting your clients into in 2021 in a suburb called Doolandella, they were sitting at around 330. They're now sitting at 450. That's $120,000 up in less than 12 months.
Less than 12 months. Less than 12 months.
Sydney Downs has gone from 447 to 600. That's 153,000 in 12 months. Callum Vale in 019 was 414. Now it's 579. That's 165,000 since 2019. So this trend is only set to continue and keep going upwards on an upward spiral.
Look, I think I could imagine that we went through the numbers recently, and I want to do this, but if you look at all our clients over the last 2 years, they've all made a minimum of 90,000 per property in the last 2 years. Cool. So I'm talking, 30, 40% return. It's crazy.
I just put out like those ones today, and all of them, 120 was the lowest, and that was for a $330,000 investment. They've made 120,000. 126, 153, 165. I can't find anyone who hasn't made $100,000.
Yeah, exactly. And this is just the beginning. So the thing is, if you look at the property clock at the moment. So if you can imagine a property clock, what's happening is you've got 12 o'clock at the top, 6 o'clock at the bottom. And as you know, what we do is we normally buy around 7 o'clock. Now, 7 o'clock is known as a seller's market, right? Because the buyer's market is between 1 o'clock and 6 o'clock. And from 6 o'clock to 12 o'clock is a seller's market. So what most people do, most people want to buy in a buyer's market. Because in a buyer's market, what happens is you can go in and you can negotiate and get a really good deal, take your time, pick the eyes out of your property. But the problem is the properties are going down. So you're catching a falling knife, because you might have bought it at 1 o'clock or 2 o'clock or 3 o'clock or 4 o'clock. And that's where most people buy, in a buyer's market. Now, we do things differently. We want to buy in a seller's market. A lot of people say, why would you do that? This is like classic Warren Buffett investing. The way Warren Buffett invests in America in stocks, I invest in property in Australia. Because what happens is at 7 o'clock, property is going up. They've still got all the way to 12. So that's a seller's market. In a seller's market, you got to try to get those deals and capture them and buy it because property price is going up. But you're catching it on the way up, and it pushes you all the way up. And that's what's been happening the last few years. I've been telling people. And people have been catching these properties, buying them at 7 o'clock. Now it's 8 o'clock, guys. Right? Just letting you know, it's not 7 o'clock anymore. Is 8 o'clock still a good time to buy it? Yes, it is. We're going to keep buying until 11. So we've got time. So jump in because it's still 8 o'clock. So I've got a lot of people asking questions here. If properties are costing so much to build, how does that impact their valuations? Do banks factor in the higher cost of building supplies? Good question.
Well, that's what Justin was just sort of talking about a couple of minutes ago. So I think we need to. I think a lot of our work moving forward is to educate these valuers who go out and put valuations on and show them how much building price has gone up, how much labour's gone up, because if they just went on, like Justin said, the old figures are $1,350, but that same house cost $2,000 to build. Well, you're $650 per square metre upside down to start with.
Yep.
The big thing about it is, from a property investment perspective, is that the reality is that if you've got a property, an investment property in any form, house, townhouse, or obviously not an apartment in any inner city in Queensland, Sydney, or Melbourne at the moment. So
any CBD in Australia, actually. Yep.
Yeah, anywhere in Australia. Yeah, but anywhere there's actually some land associated with it, there's value in it. There's value in the land. Like it's astronomical, obviously, in our own, well, my own market, which is obviously the Brisbane area. And you've really got to be comfortable with the fact that you might be what you're paying probably over the odds. What you might think is over the odds in value for a block of land, knock down a house and build a specky, or or buy. I'm building 2 houses right now in Algester for a developer who sold out his estate in about 32 seconds.
Yeah.
But when he developed the land, he thought the land was this is Algester, right? Near Callumvale in Queensland.
Yep.
So it's probably about 13, 14 kilometres from the city, but it's
still
still
know the area really well. Nice suburb.
But in Brisbane terms, that's still a long way out. It seems like a long way out. Sorry, it might be 20 k's out. It might not. I don't know the exact dimensions. But the long story cut short is that when he bought the land, he's going to develop it into 30 lots. He was expecting to get about 270 to 290 a block. It actually got held up because of council shit. Excuse my language. And he ended up getting high 3s to 400 per lot for his land.
He made an extra $100,000 a block.
Yeah, exactly. Amazing. Because they hold up. See, a lot of
council hold ups.
I know. See, you never know. Sometimes this blessing is disguised. Someone said, how much has Capalaba gone up?
I'll have to do research and come back to that.
I think over $100,000.
I actually know Capalaba reasonably well. It really depends on which part of Capalaba, because Capalaba, believe it or not, is a bit like the old, Stretton, Callumvale, Parkinson story. If you guys know it well, is that they're in the same place, but one's called Stretton, one's called Callumvale, one's called Parkinson. Mm-hmm. Same postcode that works. Well, Capalaba has the same postcode as Chandler, so depending on whereabouts in Capalaba, you actually got astronomical growth because it's Chandler.
So what would you say, just on an average $500,000 townhouse or something? What would you up to 600,000 now? Have they gone up 100?
No, I wouldn't put it in that sort of category, okay. Mate. I'd actually more put it towards. It was probably a $400,000 townhouse. It's probably now $500,000.
Okay.
Yep. There you go.
Like that type of.
That's space. About $100,000. About $100,000. It's pretty amazing. Yep.
But one of the things we all have to pull it back to is that land costs more, building costs more.
Yes,
that's
right.
We tend to go back to the valuation issues. If your investors currently have property, they need to be educated to say, I want to talk to my bank, I want to create this equity, and what can I do with it?
Exactly. Because there's so much equity there, but the challenge is there's, one thing is having equity. Another thing is actually realizing the equity through the banks, which is hard.
And how to use it.
Exactly. And how to use it. And that's one thing I want to talk about. And we're going to be going through a whole session next week about how to extract the most equity out of your property, which is going to be very exciting. because it's very important. Because I've done an experiment, and it's interesting. I mean, sometimes we'll do 10 townhouses in one block. They're all next to each other, and each one, we had 3 of them valued by the same valuation company, and all 3 of them came at a different value. You know what I mean? So
It's absolutely crazy.
from the same company too, which is crazy.
Yeah.
But so someone's saying, if there's a big lag in registering properties, if you buy off the plan, are those properties finishing the time that was contracted, or are they taking longer to build? How do you protect yourself from a development taking longer than contracted to?
Well, that's probably adjustable. Every building contract has got liquidated damages. Some builders put in 26 weeks, other builders put in 50 weeks. Once you get over that period, the builder then pays you liquidated damages. But what would be an average building? Say 200 square metre single level house.
Well, I've gone from, I would say, gone from 6 months to 9 months. That's what you're allowed under your
6 to
contract.
9.
Yeah.
And it was what? It was 4, 5.
Mate, if you like, even before the
I'm talking
current
before
situation
COVID.
we had, before COVID, 16 to 20 weeks to build a low set 200 square metre house.
So it's almost double. It's almost doubled it.
Basically.
Okay.
And like, the biggest issue we have is there's just no control over it. The best thing we can do as builders is keep communicating. So,
How long is it taking you to get timber, like your prefab trusses, frames?
So I had a job. I was due for delivery in the last week of July.
When did you book it?
January.
Okay.
Yeah, just kept getting pushed back, and it got delivered 2 weeks ago tomorrow. The lower frame. It's a bit scary, and I'm a small builder. Like, I don't do a huge amount of volume. I do bigger houses, yes, but smaller volume.
Yeah.
But I've heard that the same as that Algester I was talking about earlier, and I was only actually laying the slab. Well, the slab was supposed to be laid on my first house there of 2 for the developer last week, and it's now going to be laid tomorrow, subject to our rain we've currently got.
It's raining.
Like, I booked that frame in last November, so I've actually had to just like keep pushing back and find a slot for it. So because it was in the system, I was able to keep pushing it back. But new jobs coming in, they're like, it's almost like a lottery of when you can get them and how you can deal with your current suppliers. So Adam, like a particular project I'm doing at the moment, and I worked out that with one supplier I could not get those frames and trusses until frames, trusses and forces for February next year. So I used an alternate supplier to try and find an alternative, and it worked. So I was able to get them in November. Off chance, lucky, but I was able to do it.
Okay. Yep. Now the thing is, if you look at Australia's GDP, and we've actually got a massive trade surplus at the moment. So we're getting more money coming in than going out, which means there's more people with more money, even though we're $80 billion better off as a society in people's bank accounts since last year, since COVID hit.
Yeah.
We're about to get even more money. So when there's more wealth, it's going to rub off on properties. And basically, the takeaway for this is, one, if you're not investing in property, you can't make money out of property if you're not in it. And maybe it's gone to 8 o'clock and a lot of people are going, shit, I missed the 7 o'clock market. And I'm saying, well, 8 o'clock is good enough to get in there, because it's going to be 9 o'clock, then 10 o'clock, and then 11 o'clock, it's going to be too late. And, if you had a time machine in 10 years' time, you'd want to go back to now and buy a shitload of property in Brisbane. The challenge is, one, you better choose the top 100 suburbs. Two, pick the right builder, because if you get the wrong builder, you're going to be in a world of pain. It's going to be bad. You can't just pick any old builder. There's going to be a lot of research that we have to do. I think we're going to be talking about this at the Inner Circle, correct, Adam? About the research that you need to do when it comes to builders and things like that, because it's so important. Because picking the right suburb, you got one part of the equation. Picking the right builder is the next part, and then getting the right structure. So therefore, it pays for itself, and you don't have to pay a cent. About property price is so cheap at the moment. Seriously, if you're watching this right now and you haven't invested yet, or if you're thinking about it, type in hashtag team call and get one of our team, book in to talk to one of our team to see if they can help you, because you'll be kicking yourself if you haven't done this, because this is one of those things. Back in 2008, after the GFC, back in 2009, whenever the prices dropped, I was going through this exact same thing, telling people, hey, now's the time to invest. Now, the people that invested 2009, 2010, they've more than doubled their money, right? Now, it's going to happen quicker. You watch this space. You think Sydney and Melbourne are expensive? Wait till you move to Brisbane. This Friday, Melbourne are stopping their restrictions. What do you think is going to happen? I'll tell you what's going to happen. People are going to get out of Melbourne and go,
That's right. They're heading north. They're all coming up.
They're heading to Queensland. They really are. I personally know a few people that are doing it as well.
George, I know 5 families who are moving up from Melbourne at Christmas time this year. And they're coming up with their pockets full of cash, and they're buying, whatever they can find up here.
And they don't give a crap because they're moving. Everyone's leaving Melbourne to move to Queensland. What's going to happen is Brisbane's going to be the new Melbourne, but sunnier and better.
Yeah, and warmer.
And warmer. But it really is. I mean, a lot of people from Adelaide have moved to Brisbane as well. But Melbourne is people leaving Melbourne in droves. And now they're finally about to leave. Now the restrictions are over. They're going to get the hell out. Dan Andrews has not done a good job. Everyone's had enough of being in prison for the last 12 months. It's crazy.
77 weeks, I think it was. 77 weeks.
In lockdown. It's the longest in the world, wasn't it?
Yeah.
Melbourne
lockdown. Most lockdown city in the world. Right?
You must be sick of it if anyone's down in Melbourne right now.
Look, I mean, the deal is when it first started, you get locked down, you think, okay, we've got a lockdown, we're over it. Then you get locked down again. And each time, people are thinking, okay, it's going to be over. If they said 77 weeks, everyone would have said, get the fuck out, I'm out of here.
I'm out here.
I'm gone. But what they did is they did it a little bit at a bit, right? Should investors look at Melbourne then, or would it be a risky idea? Okay, let me try to get this straight again, guys. We like to buy in a seller's market. People leaving Melbourne makes Melbourne a buyer's market because property prices are not going to be going up as much because there's less population, so we don't want to do that, right? If you compare the price of Melbourne to Brisbane, there's so much disparity. What we're looking for that gap, right? We're not looking to buy retail, which is what Melbourne is at the moment. We want to buy wholesale, which is Brisbane at the moment. So I keep finding that gap, and that's why we keep moving around Australia, because Brisbane's not going to always be the number one place. I'm already looking at my next place, and I'll be announcing that soon. But still, Brisbane's still the best place at the moment. But you've got to go in there. Don't touch Melbourne and Sydney. They've already had their boom. They're already done. They're full. They're to the chockers. Let's wait for them, because the problem with Melbourne's a 1 o'clock market, right? 1 o'clock is not what you want to buy. You want to buy at 7 o'clock in the morning, 7, 8, 9 o'clock. That little triangle down the bottom of the left of that clock, that's where you want to buy.
But George, George
and Adam, sorry, if I can just cut in here about specifically what you're saying there, relevant to buying in the right time of the market, is now's the right time, because the reality is Brisbane is going to keep growing. There's no question about it. Absolutely no question about it.
Oops, my camera's just gone off. All right.
I was just going to say about Melbourne.
We might get a plateau in Brisbane in 12 to 18 months' time, but between today and that next 12 to 18 months, we're going to have growth of some description, because there's so much FOMO out there in Brisbane. A lot of that's being driven by interstate migration, and people going, crap, I was going to wait another 3 or 4 years before I could get back in the city of Brisbane, because they're living in the outer ring, and they wanted to come in,
It's just become too expensive.
but they just can't do it. They're just biting the bullet.
Okay. You guys keep going. I'm going to have to set up my camera. I don't know what's going on.
Have you handed the keys over to us, George? Justin's got your hands full there.
My daughter, my 4-year-old daughter, just found a spider. She wasn't happy.
She found a spider.
Yeah.
Are your kids scared?
I'm sure everyone can forgive her for that.
Yeah. My little fella loves ants at the moment. He loves to watch ants and chase ants around the place. It's very good. Well, maybe we should answer some questions from the Facebook users, I'm guessing. If George has left us in charge. Investors, Melbourne's hot market, too hot. Have you bought anything in Melbourne at any time? Yeah, I've bought Melbourne. I've got Melbourne in my portfolio. Justin, have you ever purchased in Melbourne?
I did some commercial stuff in Melbourne probably 6 or 7 years ago, and I did really well out of it.
Yeah.
I haven't done residential in Melbourne, I must admit. So
yeah, I've done well out of Melbourne, but I bought back in the late 90s, and I bought 3Ks from the city, so that was a pretty good investment, which I still own. And another one, I bought a 1,000 square metre block, probably 50Ks from the city, and I've still kept that one too, and that's gone up quite a lot as well. But I don't follow the Melbourne market as much as Southeast Queensland. It's just, and you don't get good returns down there. Like if you've got a property worth, let's just say it's worth 500,000, you might only get $350 to $400 a week rent. There's the market value in Brisbane just to get into the market. Well, I'm just going to look at that question that just came up. Back when COVID started, I personally thought that prices were going to drop. I thought the world's in trouble. We're all going down the drain. Property prices are going to steady or just sit steady while COVID happened. But the total opposite happened. Since COVID started, prices have just gone through the roof. So I think it's very hard to, when you say, would you buy now? I think, yeah, I don't think there is a wrong time to buy.
I can't see these questions, Adam, if you want me to help respond to them. So
Okay. I've just got some questions popping up on the side here. If building suppliers, go George.
Can you see me? If you can keep going, Adam. I'm still working on my camera.
I was just going through a few questions.
Yeah, go for it. Go through the questions. That's fine. We're going to get this camera working one by the other. I think I kicked the cable.
So if building supplies are going up, does this affect body corporate fees on townhouses? No, because the townhouses are already built and your body corporate's there to more look after your maintenance and ongoing insurance.
It'll affect the insurance, though.
Yeah, you think the insurance will go up?
It'll have
tiny bit.
Cover total replacement.
Yep.
Yeah.
But
so what will they need to do? They'll have to get valuers out to revalue the cost to replace the buildings, I'm guessing.
Correct. Exactly. Yep.
So, yeah. But depends on how many townhouses you have in your complex as to how much. If it's shared over 100 townhouses or 50 townhouses, you might be talking a couple of dollars a week.
Exactly. It's not going to make a massive difference, actually.
Not going to be
basically, because insurance is just about...
My opinion is because of the way that townhouses are now built with like really good intertenancy wall systems for fire and stuff like that, it should be very marginal. And that whole intertenancy wall system should offset a lot of insurance issues. Whether the insurance underwriters agree with me, I can't answer. But
Time will tell.
there's
The
actually
fact of it is, whenever your property price goes up, your insurance goes up in proportion.
But also,
No,
your
it doesn't matter if it's strata, body corporate, or it's your normal insurance. It's still the same thing.
well,
Even on your home with living.
if everyone looks at their own individual insurances for their own house,
Yep.
to this day, insurance companies will put up the value of that house every year, whether you like it or not.
you like it or not.
Yep.
Yeah.
That's right. Exactly.
So
That's right.
that's a big reality. And and in a Brisbane market, full well we went through periods of time where we might have only had like 1% growth per annum, but they still put them up. Insurance premiums up 5% to cover them.
Exactly. That's the way it works. And
Naturally.
yes, that's right. So, guys, look, our time is up, and we're going to have to move to our inner circle and talk to our inner circle group. Guys, thank you so much for everyone joining me. Justin, thank you so much. Adam, I really appreciate you both coming on. It's been great.
For filling in.
Will you be joining us in the circle? Because what I want to do in the inner circle is we're going to go through our inner circle and really talk about the nitty gritty and talk about a few strategies and how you can counter that. But also, with all this doom and gloom about, talking about property price going up and insurance going up and building price going up, there's actually quite a few opportunities now. Because what you can do is if you buy something that's already pre-built, then that's already got inbuilt in it an actual profit you can make because building prices have gone up. And I'm going to talk about that strategy. And we've got a lot of clients using that at the moment that have made $50,000, $60,000, $150,000 even before they settled. We had one client, his name's Steve. He actually, he's in Queensland. Adam, he did a deal recently for his daughter. And that property, hey?
Steve's done a couple, hasn't he?
Yep. He's done a couple, but the one with his daughter, especially that one, that went up about $150,000. He hasn't even bought it yet.
Is that the one, Doolan Della or Sippy Downs?
I think it's Doolandella. So Sippy Downs went up too, quite a bit.
Yeah.
Yep. So what I'm going to talk about to people in the circle. So guys, quickly, before we finish, if you want to talk to our team and really find out about investing in property, see if it's right for you, if you want to jump on this boom now, I suggest you type in #team chat, and one of our team members will reach out to you and have a chat to you and see if you qualify and talking about what we do. What my overarching goal is, I want to empower 10,000 Australians to create financial freedom using property, using the Markowski method. And we're well on our way. And I really want to get to that 10,000. So if you're interested, type in #team call, and we'll give you we'll talk to you in the chat, reach out to you, and see if you're right. Thank you so much for watching. Thanks, guys. We're going to get onto our weekly show. Talk to you soon. Thank you for listening. I'm grateful for all our listeners around the world. If you found this podcast valuable, please share with someone that might find this useful, and please join our tribe of purpose-driven investors, increasing income and impact in our Facebook group, Positive Property. Please note, with a multi-million-dollar property portfolio and a passive income, I've become incredibly successful in investing in property. The fact of it is, however, many people may find investing in property challenging. It's not easy, and it takes a lot of hard work. However, becoming educated to make an informed decision and having the right advisors gives you the tools you need to succeed. The most important part of this formula, however, is to actually take action and apply that knowledge. It is important to understand the information I share is of a general nature only and is not taking into account your unique circumstances. If you're considering investing in any asset class, you need to seek the advice of an independent professional advisor who will be able to look at your specific situation. Be sure your advisor has actually achieved the kind of results you're seeking. Many won't have, so beware. We've taken great care putting those educational resources together. We'd be surprised if you didn't find any errors or omissions. If you do, our legal team says we have to say we're not responsible for those. In fact, as with all things, even your success, we're not responsible. That responsibility always has and always will come down to you and the actions you take. We're passionate about supporting you in that process and helping you increase your ability to create wealth, live the life you desire, and provide all the things you dream of for you and your family.